Hello and welcome to the Stock Planner channel. This week I'm going to go over my weekly stock plan review and trading plan. Basically, I'm going to go over 5 stocks that I'm looking at for early in the week, my rationale for choosing them. Also going to go over one of my favorite YouTubers, Invest with Henry. My overall goal is to be more consistent and make 6% per quarter. I know that doesn't sound like a lot, but that consistency is 6% equals 24% APR. That is the target. I used to be an analyst for the military, computer analyst for industries like Boeing and Accenture. So I know how to analyze and also know how to program and use the tools available to me. Most of them are free. I enjoy taking a risk. That's why I like trading so much. Calculated risk. A calculated risk. You got to be in it to win. Swing trading does offer a chance for some riches, but you have to practice your trade, read, educate yourself, do your own due diligence, take responsibility for your own trades, and win. Let's get started. They say to be a successful trader and to improve your consistency, you should keep a journal. I use a blog as my journal, and I'm not consistent. In my blog, I have a tab for news, and I've been working on this lately to enable me to better plan out my morning. And these are the topics that I am interested in. Looking at Ukraine. Of course, everybody's concerned about Ukraine. No one likes to see a peaceful country being attacked for their resources. Russia's war in Ukraine is continuing for nearly 6 or 7 months. Ukraine's Zelensky warns of tough winter. Well, I do believe that Russia is going to use oil over the winter as a leverage, especially for Europe. That pipeline in Europe closed for a few days, and the threat of the nuclear plant in Ukraine. I think it's part of Putin's energy plan, and I think it's going to put a lot of pressure this winter. I think it's going to be a long, cold winter. So how do I make some money on that? If Putin's going to use oil and energy as a threat to Europe, I believe that I'm familiar with US oil, and my theory here is if oil goes up, the profits will go up, the stock will go up, and if oil goes up in Europe, it's definitely going to go up here. So I think it's going to be a long, cold winter for a lot of people, including the United States. This is US oil, and this is a paper trading trade that I showed my wife. Now we're losing on this. Now we're actually making $4, and that's because we're short. But I think I've changed my opinion. I'm going to close the position, and this is Monday, the market's closed, but I think we're going to go long to that same 75 level. Long the 75 level. Closing out the short, based on the news that I just read, long to 75. The daily indicators, the RSI has come back around. The stochastic is almost crossed over, and the MACD is below the zero line. So there's signs of going long. I think it's going up to 75. So if you haven't done it, TradingView is mostly free, and it allows you to do paper trading right off the bat. What do you think about oil? Is it going up, going down? Do you think it'll affect the energy prices here? Leave a comment below. I do. Let's see what the trade is. So putting the short strikes around that 75 where I think it's going to go, and using a broken wing butterfly, buying 2 puts on both sides. We want this is a put broken wing, and that's a long strategy. We want to use a trade that's going to give me some money if it hits the 75. And here is that $75, and immediately I can get these numbers: 198, 236. Depends on where it hits. If it hits right away, it's going to be 86. My max loss is $78. And if it hits right away, I can take $98 or so in a few days, and that's better than 10%. This is my net credit. It goes in my pocket right away, and I have a potential of earning $819, which, look, if it hovers around that 75, 76 level at the end of expiration, that's where you have the real pay. The profit chart looks like this. As long as it stays above 67.81, and it is, we're going to win something. Our max win it's going to be when at expiration at $75, $76. $76 is the number we used. We could have used 75. All it has to do is pick the right direction and stay above $67. Now, the risk is on the downside only. So what is the likelihood of oil going down? We're in September. I think the odds are in my favor that it will go up. What do you think? What do you think of this trade? Risking 781 to make 10% or better with a reward at $76. This is a website that I just started using. It is mostly paid. There's some free areas, and I'm starting just to get a little feel for it. I'm using the free stuff. Let's see if I like it and maybe use it for the future. But it's called Y Charts, and I'm looking at the economic data because right now I'm concerned about inflation and recession. And there's your inflation and an unemployment rate for the United States, 8.52. And I remember it was high as 9, and it just was lowered. And we have a low unemployment rate. And I think this figure is a little bit fudgy. But you compare that to Spain, look, 12.6% and pretty high inflation rate. United States, Europe, Germany, United Kingdom. United Kingdom is very high for their inflation rate. They have a low unemployment rate just like the United States. Deglobalization is going to keep inflation, I believe, high. We're coming into a recession. So how do I make some money here? Before I leave, this website has some key economic indicators. It's a nice chart for the United States. And if you want to change the country, you're going to have to pay. Looking at the news for inflation, back to school, struggles, inflation impact on shoppers, people selling their expensive houses and cars, smaller tips in restaurants. I know that when I go out or take a long trip, I take a snack in my car. No longer do I stop it to pick something up. We've been cooking at home a lot more. It's better food, better quality. A lot of the restaurants in our small town are just Walmart food warmed up. Some have noticed an uptick in credit card spending and slow or delinquent payments. That's not a good sign. Now, when you're looking at inflation stocks, you can look at Visa, PayPal, Walmart, Kroger. All these companies will be affected by the scale back spending habits. Walmart is a very strong company, not going anywhere. Pays a reliable dividend. It's undervalued at the moment, according to Simply Wall Street. Great past growth. It's very healthy. There's going to be a future slowdown in growth. And you can see that the earnings grew by 38% over the past year, but they're expected to only grow by 9.5, about 10%. That's a slowdown. This is going to happen to all retail. Simply Wall Street has this as undervalued. Looking at the chart, we see we gapped up at about right here. Was this the top? Is this support? Looks like about 122. Expected move of this stock is 8%. Now, expected move could go up or down. You just don't know what it is. But according to options and option pricing, they're saying that the market has priced in an 8% move, which puts a high strike at 143. Well, that's good. And a low strike at 122, 123. That's good too. So they're saying there's going to be a $10 move. And if you invested $1,000 with that $10 move, you could put $78 in your pocket. And you put more with options. This would give you a return of an APR of 31%, an 8% move. One more thing I want to add is when you have a gap up, usually a lot of investors invest that the gap will be filled, and this gap was filled. And then if you're in a strong economy, the stock should continue up. If you're in a weak economy, who knows? But I'm guessing it's going to go down. RSI is pointing down. Stochastic's pointing up. MACD is hovering around the zero line. No info here. No info from their indicators. So, will Walmart be infected by the recession and inflation? I say it will be. Leave a comment below. Love to hear from you. Bull stocks wilt in the face of rising Fed hostility. The Fed is determined to curb inflation. In America, in USA, jobs seem to be okay. Very positive job report. Yet stocks are going down. The Fed is determined to raise the interest rate to curb inflation. That's going to be a slowdown in the economy. A slowdown in the economy is going to affect a lot of industries. One of those industries is the technical industry, because companies that are not making as much money will be hesitant to go ahead and invest in technology. Now, technology innovations will continue, but investing in technology, I think, will decline through the rest of the year and throughout 2023. One of those companies is Logitech. And you can see that Logitech has been on a decline for quite some time. This is TradingView using the daily time frame, and my settings are in the description below. Logitech International, through its subsidiaries, designs, manufactures, and markets products that connect people to the digital and cloud, computer connectivity stuff, and mouses. It's trading below the estimate of fair value based on free cash flow. Earnings are forecast to grow 13%. High level of non-cash earnings. What is that? Non-cash earnings. Non-cash incomes are the sources of cash that do not involve cash inflow or outflow. They are typically appreciation of assets, and it's like an accounting issue. So I guess you can cook the books. High level of non-cash earnings. The company is fairly healthy, though. Some of its competitors, it's that downward trend I just showed you. Price target decreased. That's not good. Company expects its revenue to be down 4 to 8%. That's not good. First quarter of 2023 earnings miss expectations. And based on this share price has fallen more than 50% from its high. This does not bode well for Logitech in a recession and inflation situation. Currently it's trading at 48.80, 49. The expected move for this stock over the next 3 months is about 20%. Now, you don't know which way the stock's going to move, so you have to pick a direction. And based on what we've seen in the chart, that direction seems to be short. So taking this number here, 19.7, and plugging it into a spreadsheet and adding it to our chart, scaling up a little bit so we can see it. If it was going up, it would go up to about $58. Let's just say it's right there. And that's with this move expectation of 20%. If it's going down, it would go down to about $39. Let's find 40 and right here. There's the trend. You could call this support, and maybe it'll bounce off of that and go back up. Here's a dividend. If you invested $1,000 and picked the direction correctly, you'd have, and it went to 20%, you'd have $197 in your pocket. Look at that APR. This is a good percentage if you guess it right. And you could do a pretty good option trade at around 44. I posted my option trade in my free Discord chat. Please post a comment whether it's going up or down. Logitech, I think it's going short. Checking out my free Discord chat under Zigzag Trade Ideas, you can click on the link here and get a list of trade ideas. I use the RSI, the MACD, and the stochastic RSI, and it lists based on an algo, some trade ideas. And on this one it says Coca-Cola long. I'm just going to take one. As in everything, you need to do your own due diligence. Use your own indicators and see if these ones line up with what you're using. But Coca-Cola looks like there's an uptrend here. The RSI is below the oversold situation, and it looks like it should come around. We like to wait till it comes around, but the stochastic RSI is oversold and looks like to come around, and the MACD is way below the zero line. We like that for a long. When they all occur at the same time, we get a buy signal. This little D stands for dividend. That bodes well for maybe an increase. It looks like we have definitely a line of support at the 65, 66 level, and there seems to be some line of support here at the 58, 59 level. It's not exactly to be accurate. If you think it's going to go down, maybe you take a downward bet. If you think it's going to go up, maybe it'll shoot up to 65. This is signaling possibly a reversal. We had that same situation here where the MACD is to zero, the stochastic is below, and the oversold condition come back around, and the RSI come back around. When they all occurred at the same time, that is a situation for it up, and it did go. This is not 100%, but I like to see all three indicators line up and try to predict these reversals. This is the zigzag indicator. It's perfect. It predicts those tops and bottoms perfectly. I turn it on when I want to go ahead and see what indicators I should choose that go ahead and predict these tops and bottoms. Now, why would I need to do that with the other indicators? Well, the zigzag repaints itself to be perfect. It looks at future data, waits to the right time, and then repaints itself. So you can't do any backtesting. You need indicators. If you're going to do backtesting on indicators, you need ones that don't repaint themselves. And the MACD, the RSI, and the stochastic RSI do not repaint itself. Well, this is the RSI, and that's the stochastic. I said it in the wrong order. Going back to my free Discord chat, clicking on the Stock Planners watch list, and clicking on the link. These are a watch list of about 300 or 400 stocks. I'm going to pare that down at the first of the year. And we're looking for a long trade because I'm overall short. And let's see what's I got for longs. This is First Solar, and this is lithium. Let's go with lithium. LTHM. I think everybody knows lithium is used in batteries. Livent Corporation, chemicals, is their specialty. Earnings are growing. We'd like to see that. Switching to the weekly this time. And my listing is showing that lithium is in a long-term uptrend. Do you agree? Now, it does swing a bit, but overall, lithium is going up. So if you really must buy, lithium seems a good choice, but I will wait for a pullback. And how you do that is you set your alert for when it comes back around, the RSI. Very easy to do. Let me show you. Click on the visual, add alert for R, and we want the RSI. We want to wait till the RSI comes down below the 30 and come back around. So we're going to RSI 4. This is my setting. I have a quick. Most people set it at 14. Crossing up. We want to come down below and cross up. And you see I use 30 a lot. Only once, and I wanted to notify on my cell phone. And now all I have to do is just wait for a little pullback. When you do swing trading, a lot of time is spent just waiting for your situation to happen. And by the way, just notice that I set this on the weekly. I'm going to wait my time. It's not the daily this time. This is a weekly. Each bar is a week's worth of data. There's a lot of good YouTubers out there in the financial niche. One of my favorites is Invest with Henry. In this video, he's making 5 recommendations of what to buy in September. I'm going to start tracking some of my favorite YouTubers and their recommendations, but only a few, just to see if I can keep up with them. And this is one guy that I really would like to keep up with. He's built an account of $10,000 into over $2 million worth of in a few short years. This is one of his recommendations, Upstart, and the other one that I like is Adobe. He's made 5 recommendations. You need to watch this video to get the recommendations, but I'm going to start tracking Upstart and Adobe. Let's see how I do. Remember to follow Invest with Henry. A lot of good advice. It's free. You can learn a lot from this guy. Well, that's all I have for you. Follow along my channel and some of the other recommended channels on YouTube. Do your own due diligence. Paper trade if you can, if you don't have any money. Read and educate yourself. Learn how to do a particular type of trading, whether it's day trading or swing trading. Well, I'm a swing trader, and win for life. We'll catch you on the flip. Happy trading.